What's going on, everyone? In this video, we're going to talk about why patience is going to be your best friend when it comes to trading, even when it feels like the trade has already left you out the door. Now, with that being said, Apex is back with 80% off sales. That sale includes one data pass, $85 lifetime activation fee. You can use my discount code DAnthony. You can find that link down in the description box below as well. Now, today was a little bit funny price action, right? So if you kind of look at the open here, we pushed down very, very quickly off that first 5-minute candle and then started to close and ramp back up. We were looking at supply here at VWAP, but I also had a ton of supply here, right? I had a ton of supply here at the 200 moving average, a bunch of different moving averages. So I didn't really want to go long off the first, realistically 5 to 10 minutes, because there's been a lot of times where I've seen a quick push up into supply where it kind of sweeps this area of resistance and then starts to pull back. And sometimes I've been caught on the wrong side of that. So what I was really, really looking for was, at this stage of the game, I'm thinking I've got to wait for at least the 15-minute ORB before I get long. And if you kind of look at the first 5-minute candle, second 5-minute candle, third 5-minute candle, here is your 15-minute ORB. Maybe I can bring my drawing tool. This is your 15-minute ORB high here, and you can see we actually break that. Now, in trading, it's very, very difficult to be patient, because in real time, we don't realistically know when the market's going to pull back. We don't know if it's going to continue. So what I decided, because it looked like we were going to be a little bit extended, instead of waiting for us to break the 15-minute ORB and then taking the second entry here on this candle, which would have paid, I decided to take first entry, but for a very quick scalp, right? 5 points. And I only took it on one mini contract, so I really didn't make that much money. It was about $100. So when I start to look at that, I'm like, oh man, this move, it just continued to go. It continued to go. And, realistically off the open, it went, almost 100 points, right? Like, or over that. So it's at this time when you see the market continue to push up higher and higher, where you feel a lot of FOMO. And when you feel a lot of that FOMO, you tend to do stupid things, where you tend to get long here, you tend to get long here, you tend to get long on the first pullback, and then it keeps pulling back, and then you end up getting stopped out, and you're like, what the hell just happened, right? Everyone else probably made a bunch of money all the way up. My dumbass took a long trade here, and then I got stopped out. If that has happened to you before, leave that in the comment section below. But what I want to talk to you guys mainly about in this video is why the power of just sitting patient and understanding that the market is not going to close down today. The market's not going anywhere. You're not going to miss out on anything. It's going to be open tomorrow. It's going to be open in an hour. It's going to be open at the end of the day. It's going to be open next week. There's going to be a million setups over your trading career, right? So if you find yourself in a situation where you miss a big run up like this, okay, what you then need to analyze is, if we just broke out, essentially, even if we pull back, I have to sit on my hands, but I've got to start analyzing where potentially is that strong level of support. And if you look at my chart, for example, I've got a VWAP here. I've got a rising 20 SMA here. I've got the 200 and the 50, right? Simple moving average and EMAs all in this region. So what I can do is I can do a visual test. And the visual test tells me one thing. If I'm trading above all of these moving averages, all above these levels of support, if I'm trading above that, there's no reason for me to get short. Now, if you're a little bit more of an experienced traders, where you're kind of looking for those pullbacks into support, then sure, you probably could have taken something in this range. But for the most of us, for the average trader, for the trader who's maybe not that experienced, you have to kind of stick to one idea and stick to one side. Trading long, then short, then long, then short is going to be very, very difficult, and you're just opening up the probabilities to you taking a losing trade. So once you've identified that we've broken out, and once you've identified, okay, where is the area that we broke out from, right? This is the area that we broke out from. Where's our support? This is where we have a lot of support, right? So in this zone. So what you're looking to do is catch bounces or reversals off of that area if we pull back. Look at what happens on this pullback when we come into this zone here, right? And almost back to that 15-minute ORB breakout, right? If that 15-minute ORB breakout was there, if I just drag this across, look at where we actually came down to. So we actually broke out through the 15-minute ORB. We pulled back into the 15-minute ORB. We held all of this support. I need to get long here. And whether you want to take longs on a momentum style play where you're going to fire into that and you're essentially going to use, let's say, a VWAP, right? Let's say the 15-minute ORB high, let's say the 20 SMA as a stop loss, then jumping into this candle gives you a very defined risk. And I'll elaborate on that a little bit more. How is my risk defined if I'm jumping into this candle? Because at the point of time of entry into this candle, you don't know that this candle is going to do this. You don't know that. For all you know, this candle could pop up a little bit and then completely come crashing down. But that's the beauty of having some defined risk, because if you put a stop loss on a candle closure below that 15-minute ORB, you would have never been stopped out. If you put a stop loss below the break of VWAP, you would have never got stopped out. If you put a stop loss below your rising 20 SMA support, you would have never came close to getting stopped out. If you're more of a confirmation style trader where you want to wait for candles to close and then enter, then your entry would be here on a following candle after we bounce off of this demand zone, okay? And in this particular scenario, you got to be a little careful because this range on this candle was 27 points. So it's going to get you into this trade. It's going to pull back between 20, 25 points. But you've got to use trailing supports, meaning for me, I use the 5 SMA. So my 5 SMA is this green line on the screen here. I tell myself one thing, and I try to keep it very, very simple because I'm very, very stupid. If price action does not close below my 5 SMA and I'm long, and I know that we're holding support, I have to sit long. Okay, so I have to endure the 20, 25 points if it happens. And assuming that we hold this 5 SMA, I need to stay long. So getting into this trade would have given you a little bit of a pop. Again, for those of you guys who take 5 points, 10 points, look at how many points it actually gave you. From getting in over 25,158 to this little spike went all the way up to 168. So if you were looking for 5 points, 10 points, you probably got filled on that. If you're looking for a little bit more, then yeah, you were in profit anywhere between 5 and 10 points. It pulled back on you anywhere between 20, 25 points. It held support, okay? It held support and then continued to make a run towards highs. Now in this situation here, because we've already put in a high of day, and because we've already pulled back once, because we're waiting for that confirmation candle, if I get into the candle or into the trade here on this candle and I start riding this back up into high of day, I've got to take profits towards those high of days. Why? Because it's a previous area of resistance. We were rejected there before, so I've got to respect that in the future. So if you, even if you take that approach, getting in at a price of 25,158 and trading into high of day, that was sitting at 25,179. Guys, that's 20 points. If you're looking for scalps between 5 points and 15 points, or between 10 points and 20 points, this is a perfect example of how you can just sit patient and you don't have to worry about trying to catch everything on this move to the upside or trying to catch all this move to the downside. You can just actually wait for something significant to happen. A break and retest of that 15-minute ORB, a break of the high of day or that momentum off the open, and then wait for a complete retest to see where is that strong support coming from. And once you start to see where the support is starting to stack up at, you can fire into those momentum trades using that support as a stop loss. You can wait for the confirmation and enter in on a following candle that confirms the high. You can do a lot of things if you're patient, but a lot of times traders, they tend to get mixed up and they tend to try to trade every single candle, shorting every new high, shorting every new high, then finally deciding to go long and the market pulls back. You gotta sit back and be patient, guys. If you enjoyed this video, make sure to give me a thumbs up on it. Leave me a comment. Let me know how you did today. Also, grab those Apex evaluations at 80% off using code DAnthony. I'll see all of you guys on the next video.